Everybody, this is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol AAPL. This first chart is a daily chart, and each candle represents 1 day of trading. As you can see here, there was this bounce off of the 50 and 100-day moving averages. The 50-day moving average is the green line at 115.15, and the 100-day moving average is the gold line at 115.36. So those are the key support levels to hold. And then the 200-day moving average at 120.65 is the key resistance level to break. As you can see here, back in the first week of November, that level broke, but Apple failed to hold that level, and there was a pullback. So going forward, candles forming above the 200-day moving average will equal more upside potential. Okay, let's look at the next chart. This next chart here is another daily chart, and on this chart, this has the Bollinger Bands and EMAs 4 and 8, and as you can see here, there's this close above EMAs 4 and 8, which are the pink and green lines, and the middle Bollinger Band, which was at 117.22. So that is the key level to hold. With the close above the middle Bollinger Band, we'll be looking for that level to turn into support and a new uptrend to begin. So if candles like that would be similar to back here in October. As you can see, the candles were forming below the middle Bollinger Band, and there was a close above here on October 20th, and then this nice uptrend followed. And so we'll be looking for that on Monday. We'll be looking for more candles to form above the middle Bollinger Band, and then the key resistance level to break is the upper Bollinger Band at 121.59. So, and then up here on Fasto is now back up in the overbought power zone. So Apple heads higher above 80 on Fasto. So now it's back up here in the power zone. And then RSI closed at 55.54. So it's now in the 50 to 70 bull zone. So that's good. As you can see here on that October run, there was RSI was between 50 and 70. And then look down here at volume. There was this nice volume spike on Friday. So not only was there this bullish move, but there was also a nice volume spike. So there's volume behind the move. And then look down here at MACD. The MACD line is the green line, and the red line is the signal line. And MACD is pinched. So look for a bullish crossover, the green line to cross the red line to the upside, to signal the start of a new uptrend. So, like back here, if you look on the move in October, the Fasto or MACD was below the signal line, and then it crossed over, and then the green line was above the red line when there was this bullish move. So right now the green line is below the red line. So bulls, you want to see that green line back above the red line. Okay, also. The open today, if you look up here, the open on Friday was at 115.29, and the previous close was at 115.20. So the open was above the previous close. So this also formed bullish one white soldier reversal pattern. Yeah, there's some conflicting data on different websites. I don't know why they didn't pick up the pattern correctly. Some were calling it bullish engulfing, but that would have had to have been an equal open. So technically, it's a bullish one white soldier. It doesn't matter. A nice bullish reversal pattern formed, and that's the most important thing. And then now let's look at another chart. This is a 15-minute chart, and each candle on this chart represents 15 minutes of trading. And if you look here, the candles were forming. Okay, so if you go back to December 1st, the candles were temporarily trading above the 50, 100, and 200-day moving averages. Okay, this is a 5-day chart, and each candle represents 15 minutes of trading, and the green line is the 50-day moving average, the gold line is the 100-day moving average, and the red line is the 200-day moving average. And as you can see, the candles were forming above on the 30th and to begin the first, and then candles started forming below all three levels, and then they turned into resistance. As you can see on the second, Apple tried to break the 50-day moving average, but wasn't able to, and then a huge drop followed. And then on the 4th, on Friday, all three of those levels broke quickly early in the day. and Apple closed above all three levels. And yeah, so the chart is once again looking strong on the 50, 100, and 200-day 15-minute chart. So bulls, you want to see this 117 at 84 turn into support, and candles forming above the 200-day moving average equal more upside potential. Take a look at the 50-day moving average. Notice how it was going down, and now it's hooking up. So it's set up to cross the 100-day moving average, and then keep an eye out for a golden cross over the 200-day moving average. That would signal that the chart is strengthening. Couple of things to keep an eye out on. Okay, there was this big volume spike into the close. So closed on large volume and on closed on a large volume at a key resistance level. If you look here at the resistance at this 119 level from back on the 30th. As you can see, it's not a coincidence that the candles for the last 3 hours of the trading day were unable to bust through this 119 level, and it's because this was the resistance level from back here on November 30th. So going forward, bulls, you want to see share price breaking above this 119 to 119 to 115 range, 125 range. You want that would equal more upside potential. But if the candles fail to break through the 119 November 30th resistance, that would equal downside risk and would put these moving averages back on deck. If you look down here at MACD did close with a bearish crossover, failing to this consolidation period that tightened the MACD line and the signal line, and then finally the MACD line had a bearish crossover. So for if you have the 15-minute chart open on Monday, what you'd like to see is this MACD line, which is the black line in this chart, cross back above the signal line, and that should signal the start of a new uptrend on the 15-minute chart. And then let's look at one more 15-minute chart, and this one shows the Bollinger Bands, and this is showing, okay, each candle on this chart represents 15 minutes of trading, and this is a 3-day chart. And what this is showing is that there was this downtrend that started over here at 145, 130 when middle Bollinger Band support broke on the 2nd, and then the candles were riding EMAs 4 and 8 resistance lower, and were forming below the middle Bollinger Band. And then here on the 4th, the middle Bollinger Band resistance level broke right at the open, and candles were riding up above in the bullish channel all the way into the close. And so this is the important level to hold, is the middle Bollinger Band at 118.71. As long as candles stay above the middle Bollinger Band, then the uptrend on the 15-minute chart should continue. If the middle Bollinger Band breaks on the 15-minute chart, then that's going to put the lower Bollinger Band at 1790 on deck. And then, as you can see here, this is a key support level because it was resistance here on the 2nd. So so you're looking, if it does pull back, there should be support here from the 2nd. What you do want to look for is if the middle Bollinger Band turns into resistance, that will signal a new downtrend. So yeah, and Fasto and RSI are both up here, right around the power zone, real close to power zone here on Fasto, and above 80 is the overbought power zone and on Fasto, and then RSI is above 70. So yeah, so there you go. This is the Apple chart. Very bullish move on the daily chart here, and what we'll be looking for is a bullish reversal confirmation on Monday, and then the start of a new uptrend. So we're Apple's on a new uptrend radar. All right, thanks for viewing this chart. Please check out our YouTube channel at mychartcoach.com and our website at mychartcoach.com. Thank you.